Good afternoon, traders. This is TonyD from the Sydney Dealing Room here. TraderTalk for the 6th of September 2017. A relatively surprising day in the market yesterday. We saw US dollar selling coming through quite aggressively in the US session. Multiple Fed speakers all coming across dovish, talking about inflation numbers that were low and how that is impacting the chances of the raising rates. Going slow as preferred option. Now this has the effect of putting the US dollar under pressure. If we quickly jump across to the from the oil chart, which is also moving, but quickly jump across to the dollar index, you can see here that we're really close to these lows that are key for the market. The 2016 lows, 91.80. If those lows were to go, then potentially the US dollar will start a new batch of US dollar weakness. Things like dollar yen below 108. If you look at dollar yen, if it breaks 108, there's no support until 105. Just quickly, we'll get onto the dollar yen for you. And you can see here, since Trump got into power, the market hasn't been below 108, and since the initial rally, and the pullback here, if you can see, would go back down towards that 105 level. Quite quickly in terms of technical support. In terms of the euro, if it can break 120 at the same time, then it can also add into that aggression of the US dollar move. The commodity currencies are all rebounding, led by Canadian dollar, the hero of the commodity currencies, which is in play today. We do have the Bank of Canada later, but definitely we're seeing the oil pop higher here in the Asian session, as it looks like the Category 5 second hurricane in 2 weeks is coming through. Now this hurricane is supposedly much stronger on its way to Florida, could be very damaging. And it's been ranked as one of the strongest storms in history, actually. So keep an eye on this. It's about 4 or 5 days from landfall, but at the moment they're keeping a very close eye on it, as it does have the ability to do massive damage if it has the right trajectory. Alright, so oil's well supported here, back up at 48. Within shooting distance now for the key 50 level, which is the major topside resistance. Hasn't been above 50 for a long time though. So we can't expect it to break that very easily in the current market, because some of these gains from hurricanes are short-term in nature and don't affect the underlying supply and demand. In regards to the Bank of Canada tonight, most traders have been buying Canadian dollar as the Bank of Canada has started its rate hike cycle. Now the rate hike cycle should have 1 to 2 more rate hikes in it. Any deviation from the 2 rate hike story would lead to severe Canadian dollar selling. So right now the Canadian dollar is near year lows, so it is actually very low in terms of where we've been. And positioning wise, a lot of traders are already short dollar CAD. Let me bring that up for you right now. And so what you have to be watching here is that the market's set up for a hawkish event. If we don't get that hawkish event, then the positioning alone can lead to an unwind to the top side. So the hawkish hold is expected, where they talk about raising rates but don't raise rates at this particular meeting. Anything other than that, or any concern about Canadian dollar strength, or any deviation from a hawkish hold conclusion, would definitely lead to a rebound. Topside levels there, 125 would be the first target. Alright traders, if you have any questions, come through to the contact details below the YouTube video. If you want to join up easyMarkets, get a deal like myself, you can join up with the link as well below. Have a good day.